Dirty dealings, corporate battles, consumer woes. This is Evening 5. Malaysia Rail Link, project owner of the 50 billion East Coast Rail Link, will form an operating company with the main contractor, China Communications Construction Co., to manage the train services. The operating company is the result of the renegotiated contract aimed at sharing operational risks between MRL and CCCC to reduce the financial exposure to the Malaysian government, said Transport Minister Anthony Loke. Loke elaborated that the Cabinet gave the green light to the establishment of OpCo in last week's meeting. MRL has been instructed to finalise the agreement, which will be signed by December this year. MRL and CCCC will each bear 50% of the risk in the OpCo if the train service operates at a loss. If the operation proves profitable, MRL will receive 80% of the earnings, with CCCC receiving 20%. The 665-kilometre project involves 59 tunnels and construction works spanning Kelantan, Terengganu, Pahang and Selangor. Construction from Kota Baru in Kelantan to Gombak in Selangor is anticipated to be completed by end 2027, says Loke. It was reported in June by Bernama that construction is proceeding smoothly and has reached 67% completion. WCT Holdings has proposed to establish and list a real estate investment trust or REIT comprising its retail properties on the main market of Bursa Malaysia. According to its board's filing, this exercise will allow the group to unlock the value of its investments in the properties. WCT said the proceeds raised from the REIT listing will be used to pare down borrowings and capitalise on strategic business opportunities. According to its 2023 annual report, WCT owns 5 shopping malls, namely Bukit Tinggi Shopping Centre in Klang, Gateway at KLIA 2, Sky Park Terminal and Paradigm Mall in both Petaling Jaya and Johor Bahru. The malls have a combined retail lettable area of approximately 3.4 million square foot. WCT shares jumped to their highest in nearly 5 years after Malton, a company related to its largest shareholder, Tan Sri Desmond Liu Siu Chun, bought a piece of land in Genting Highlands to build serviced apartments and luxury villas. The counter rose as much as 17% to RM1.04 in the afternoon, its highest since August 2019. However, it didn't manage to hold on to its gains, ending the day at 98.5 cents, which is still 11% higher than the previous day's close. It was the 5th most actively traded stock today, with more than 100 million shares transacted. The High Court has dismissed Datuk Sri Najib Razak's bid to serve the remainder of his sentence under house arrest. Judge Datuk Amarjit Singh Surjit Singh said today all the affidavits filed in this case are mere hearsay. The two by Najib, he noted, contained bare statements about the existence of a purported order from the previous king that the former Prime Minister served the remainder of his jail sentence at his own home. He said Najib had failed to mention his source. The judge also dismissed the supporting affidavits by Deputy Prime Minister Datuk Sri Dr. Ahmad Zahid Hamidi and Pahang MB Datuk Sri Wan Rosti Wan Ismail as hearsay. Both had cited Minister of Investment, Trade and Industry Tunku Datuk Sri Zafrul Abdul Aziz as their source. Meanwhile, Tunku Zafrul had attempted to file an affidavit, but the court denied him as the law does not allow him to do so at the leave stage. It is to be noted that Najib, through his lawyers, had objected to Tunku Zafrul's application to affirm an affidavit to correct some inaccuracies in Ahmad Zahid's affidavit. The judge said since all 4 affidavits are not based on Najib, Zahid and Wan Rosti's personal knowledge, the authorities have no legal obligation to comply with Najib's demand to be released to his residence, nor reply to Najib's letter about the existence of the purported order. An immigrant labour recruitment system under the supervision of the Ministry of Home Affairs had been operating for 6 years without a finalised contract, according to the Public Accounts Committee. The letter of acceptance for the Foreign Workers Centralised Management System was issued on January 12, 2018, but the contract remained unsigned between the government and the service provider Bestinet up to March 13th this year, PAC noted. PAC chairperson Datuk Mas Emiryati Samsudin said that this clearly violates the government's government's rules. The Cabinet approved the implementation of the FWCMS under the public-private partnership model on August 26, 2015, but the system was not included in the list of approved projects, according to a letter dated December 2020 by the Public-Private Partnership Unit. In addition, the Cabinet notes on the direction and the implementation of FWCMS were not tabled to the Cabinet before the letter of acceptance was issued. The breach of procurement procedures or PPP rules, along with Bestinet's request to increase collection charges from 100 to 120 ringgit, contributed to the FWCMS contract not being signed, PAC added. Meanwhile, PAC also found weaknesses in the management of identification control in the FWCMS, with 2 IDs held by non-Ministry of Human Resources officers and 24 unauthorized users approving employer applications. The incidents have been reported to the police, PAC noted. Meanwhile, PAC said it will obtain information related to an announcement by Home Minister Datuk Sri Saifuddin Nasution Ismail on the Bestinet's 3-year contract extension. PAC advised the Home Minister and Human Resources Ministry to collaborate on a comprehensive strategic plan for managing foreign workers beyond system development, ensuring there is no duplication of system functions which would result in a waste of public money. Winstar Capita, which manufactures aluminum products, has filed for an initial public offering on the ACE market to raise funds to buy new production equipment. The proposed IPO involves a public issue of 56.55 million new shares and an offer for sale of 17.4 million existing shares at a price to be determined later, according to its draft prospectus. All in all, the listing would offer investors up to a 25.5% stake in the company. Acquisition of the aluminium extrusion press machine and equipment will increase the total annual capacity to 15,285 tons from 6,705 tons, says Winstar. The company is also setting aside some of the proceeds for working capital, including for the purchase of aluminium billets, its main raw material. Winstar mainly manufactures aluminium profiles and ladders, which make up 57% of its revenue. The company also installs solar panels, which Winstar considers a non-core business. RE player Sunview Group currently owns 30% in Winstar through its wholly owned subsidiary VAF System. Post-IPO, Sunview's stake in Winstar will be trimmed to 24.15%.